morning everyone, this is Amit Pabari, founder and managing director of CR Forex. If we have to compare what was a closing last year and this year, rupee has weakened by 8% approximately, and at the same time dollar index has become stronger by 4%. Now if we analyze the reason, there are two primary reasons for the same. First, inflation in the US was at 40-year high last year, because of which the Fed had to increase the interest rate. Approximately they have increased the interest rate by 4.75% last year. And second, the second point was Russia-Ukraine war, which led to a lot of volatility. Now the big question is where we are heading in the coming year. Let us analyze that. So now if you see the current scenario in US, inflation is still much higher than the Fed target area of 2%. It means that kahin na kahin Fed will continue to increase the interest rate, and if they continue to increase the interest rate, it will have the same impact what it had last year, that all emerging market currency will get weaker and dollar index will move higher. Now let us analyze the second factor, which is called seasonality effect. If you see the table, in the month of April, May and June, generally rupee has weakened at least 7 times out of 10 times. In the month of April, rupee has weakened approximately by 0.5% on average. It gives an indication that April, May, June quarter we will have pressure on dollar rupee pair. Now let us understand what is RBI doing. We will divide that into two parts. First, forward book को देखते हैं. In the month of October, RBI का forward book was close to $0.25 billion. By end of January, the forward book has become $21.73 billion. It means that approximately 20 billion forward पे buy किया. Now let us move to the second part, which is called FX reserve. FX reserve in the month of October was close to $524 billion. Abhi it is close to $580 billion. So basically the FX reserve has increased by $54 billion. Out of that, some amount we will say it is because of revaluation of asset, and some amount is just because of buying reserves. So approximately we can say that 20-25 billion dollars तो RBI ने spot पे buy किया है. So in totality between forward and spot, RBI has brought close to $46 billion. It is a very important indication. It indicates two things. Bottom pay, RBI is buying. So any dips has to be bought. We cannot go against the RBI. That is the idea. Now let us move to outlook for rupee. Next week will be a shortened week. 2 days holiday है, Tuesday and Friday. Second, RBI का policy है on 6th April. We are expecting RBI to increase interest rate by 25 basis point. If they do that, it will be a non-event for the market. Only point to note is that if they say that in future they will not increase the rate, then rupee can depreciate towards 82.70 or 80. Then other factors, whatever we have discussed, April seasonality, inflation remains high, and RBI will be net buyers if any kind of inflow like HDFC comes. So we can conclude that 8150 to 8180 will act as a strong support for the pair for the coming week. The pair can consolidate between 8180, 8190 on the lower side to 8270 on the higher side. But the important point to note is that the overall biasness of the pair is on the weaker side, and there are higher probability that the pair will eventually break 83 and move higher in coming days. Now let us discuss strategy for thin margin exporters like agri exporter or chemical exporter. If someone has taken costing between 82 to 82.40, ideally they should cover 60 to 65% of their exposure between 82.35 to 82.60. For remaining position, they can target 82.80 to 83. If they are waiting, they should keep a stop loss of 82. Now, if someone is taking aggressive costing above 82.40, they should wait to cover anything above 82.50 to 82.70 levels. Now let us discuss strategy for thick margin exporters like textile exporter or engineering exporter. In the month of Feb, when the pair was trading close to 82.80 to 83, we advised them that they should keep the hedge ratio between 50 to 55%. In the month of Feb, we said that whenever the pair is trading below 80 to 50, they should simply use their forward and reduce the hedge ratio towards 40 to 45%. For the month of April, there are two kinds of idea. Idea number one is they should keep the hedge ratio between 40 to 45%. For further booking, they should wait for at least 82.70 levels. Now let us discuss strategy for importers. As the downside is limited and there is a risk that the pair can move higher, so the simple mantra for importers is that any dips has to be bought. Between 82 to 82.20, we should be at least covered 1 month import. If we are lucky and the pair breaks below 82, then between 81.80 to 82, we should at least buy 2 months import. With this, I will end my today's presentation. Jai Hind, Namaskar, फिर मिलेंगे next week. Thank you.